flow of capital into the market has many suggesting significant changes in the way reinsurance is deployed. We spoke with Frank Nutter, President of the Reinsurance Association of America, about alternative capital as well as regulatory efforts affecting the reinsurance market. Here's what he had to say.
Alternative capital appears to be converging into the reinsurance sector. Most reinsurance companies either have a converged capital approach or they use capital. I'd like to say that the alternative capital is both competitive and complementary to the industry. It offers the industry additional capital resources, but of course it's very competitive, particularly with the property catastrophe market. So it appears to be a permanent change in the capital structure of the industry. The FIO report is a nice review of the value proposition of reinsurance. To us, the best takeaway is something we've supported all along. The Dodd-Frank legislation that created FIO gave them the authority to enter into what's referred to as covered agreements, largely international agreements that would set the terms for cross-border transactions in reinsurance in particular. We're supportive of that, and the FIO report did continue to embrace that as they have all along. So we're hopeful that 2015 will be a year where there's active negotiation over the terms of covered agreement. Capital standards are a real challenge. We believe strongly that the U.S. system is sound and that the international developments by the regulators looking at capital standards that would apply globally need to have a recognition that the U.S. system is in fact sound, both as to group supervision as well as the capital standards applied. 2015 appears to be the year of decision making and all that, and we're hopeful that the U.S. system gets a kind of mutual recognition with the other countries that it deserves. New legislation perhaps in the area of corporate taxes. Both the Republicans and the Democrats and the administration have been talking for some time about corporate tax reform. Certainly the property casualty insurance industry would be part of the targets for that reform. So we, like the other insurance trade groups and advocacy groups, are really going to make corporate tax reform a priority. We believe the industry is appropriately taxed on a current basis, but we also anticipate that proposals for change will be made. Growth is a problem in the reinsurance sector, and growth, to the extent that we're just talking about the United States, would have to look at new market opportunities. Clearly companies are diversifying and looking at other geographical areas, but risks such as cyber risk or business interruption or supply chain risk, we've long called for privatization of all or part of the National Flood Insurance Program to give new opportunities. I mentioned terrorism risk as being another one where some reinsurance companies would like to look at that as a new growth opportunity. But from our perspective, it looks like what the industry needs is a more aggressive action related to creating new market opportunities, not just transferring risk between one company to another.
We look forward to Frank hosting Reinsurance Today right here on RIN TV in 2015. Meanwhile, if you'd like more on the news impacting the reinsurance market, visit the RAA website or the RIN TV On-Demand Library.